Welcome to another episode of Meet My Pro.
Hey,
I've got a familiar face, Mr. Kenneth Davis, stopping by to chat about some things with us.
that's right. That's right.
We're going to talk about conditions of buying a home, just generically.
Mm,
We're going to talk about seller concessions.
love it.
What is that? And we're going to talk about $20,000 in grant money for first-time home buyers.
Love that.
Have never had this opportunity in the 20 years I've been lending to my clients. So
Mm.
definitely want to share that information. But first, let's talk about
Okay.
concessions, seller concessions. So, it sounds like the seller's doing them a favor, but the buyer ends up having to finance that seller concessions. First of all, tell everyone what a seller concession is.
Well, basically, sometimes buyers find a home that they like, and they might need just a little bit of assistance trying to get into that property. Maybe their funds are a little short, so we can ask the seller if they wouldn't mind helping them out and providing some of that money up front. The buyer can finance that money in, and it helps facilitate the process so that they can get into their home and everyone's happy.
So you got two buckets of money when you're buying a home.
Yeah.
The first bucket is your cash down. We're going to talk about that in a minute. But your second bucket that you can never ever avoid is your closing cost.
Mm,
That includes lender fees, underwriting and processing,
yeah.
sometimes discount points depending on the interest rate, title fees to ensure that the property has a clean title to be loaned on and you're the owner with the bank. And then we've also got escrows, taxes, and homeowners insurance. And although we don't escrow for homeowners association dues, that's figured into your payment to make sure that your budget fits. So when we're talking about closing cost, we're talking about all those things being due at the
Yeah.
time that you go to close on your home. On an average, depending on how expensive the home is, that amount of money can range between $4,000 to $6,000
Mm.
on an average home. So going into it, part of the reason why you're talking to Mr. Kenneth here
Mhm.
about buying a home is that he's navigating that landscape for you
Right.
as to how we can finance in that closing cost if you need it. When a customer comes to American Mortgage Bank in Gladstone, what we do is we sit down and we talk about what their budget is, how much money they have in their bank
That's
account,
right.
and what is the long-term plans for their home,
Right.
so we can navigate the affordability of the property. So when doing that, his job's really carved out for him if he does need to get some closing costs. So when you're presenting offers,
Right.
and you've not always just been a buyer's agent, you obviously list and sell properties for people.
That's correct.
Why is it that taking an offer without the seller concessions is more favorable than one with? Is it because it's just another pain in the butt, another obstacle? It's just more cumbersome.
I don't necessarily consider it always a pain but sometimes I just don't believe that people truly understand how it works.
Right.
So if you explain it to them, the process, they can find out that it'll give them more opportunities to probably get their house either purchased or sold or what have you. And it works out to be a win for everybody.
Let's talk about how you'd structure that. So, on a conventional loan, they allow you to ask for up to 3% of the sale price
Mhm.
to be used towards towards the buyer's closing cost. On USDA, VA, and FHA, they allow you to ask up to 6%, and on some programs, it's up to 7.
Mm.
Now, say for example, I'm selling my home and I agreed upon $100,000 to sell it to you.
Mm.
And
I
you
appreciate
said,
that.
hey, I need you to pay 3% out of that 100,000. I need you to pay the 3% closing cost for my buyer. That really means that this guy's only going to get $97,000 because $3,000 of that is going over in another column to offset the cost that the buyer's buying. Now, say for example, he was okay with the $100,000, but he wasn't going to do any seller concessions. He had to have that $100,000 in his hot little hand.
Oh, yeah.
Then he could come back as your agent and say, I want to give you $103,000 for this home,
Right.
and I want $3,000 to go towards the closing costs, and you, Mr. Seller, are still going to get your $100,000.
Exactly. Yeah.
So that's how seller concessions work. And it doesn't change your interest rate. It doesn't change the terms of your loan. And it's not like someone's doing you anything other than allowing it to take place on the transaction.
Exactly.
The home still has to appraise for that sale price with those seller concessions. So you may ask for seller concessions, the appraisal come back, and the home's only worth what the guy wanted, not your concessions as well, and you may have egg on your face and have to withdraw.
I never have egg on my face.
Never have it if we try to avoid it.
Yeah.
By the way, eggs are still very expensive.
Right.
One also, so seller concessions. Now, some loans, USDA and VA, they are allowed to stack those loans regardless. Those closing costs.
Okay.
That's just the benefit of those particular loans. And how do you find out what you qualify for? You call Robert at American Mortgage Bank. And then after you get pre-qualified, then you hook up with a quality agent like Mr. Kenneth Davis.
Yes.
And then he shows you the homes that are on your wish list. Let's talk about conditions. So fast forward, you've navigated and gotten the conversation transparent with the seller. You guys have all agreed on an offer. You've got a contract in your hand.
Yes.
That contract, is signed by everybody. Everybody knows what time it is. We're going to close in so many days. We have so many days to get an inspection done. Those things all take place. I'm in the backside with your contract, triggering a packet that comes electronically to you. And then after you are electronically entered in, so to speak, with your packet, then it goes to underwriting. About 72 hours later, we have, most of what we need to know about the file. We get that appraisal ordered, but when that comes out of underwriting, and when we get that appraisal back, it's not the end of the road.
No.
We've got conditions.
Yes.
And sometimes consumers or customers can be a little bit confused as to where they're at in the path. Like, where am I at in the assembly line? I gave you all this stuff to start with.
Right.
And now you're calling me wanting more stuff.
It's a common practice, though. I mean, it often happens. I mean, really, you might need to provide just an extra document.
Because the can of worms sometimes get opened.
Right.
Or the documentation you gave wasn't clear enough to start with.
Exactly.
A lot of stuff is discovery.
Yeah.
Many a consumer, because they don't buy homes all the time, sometimes they'll go, well, I didn't know that was important for you to know. Anything about your finances, debts, credit pulls, all that stuff is important for us to know because we're working on your behalf.
Right. And like you said, it's not the end of the road.
No.
It's just one little hurdle that we have to go over. We turn that in, and it usually satisfies all the criteria, and you're right back in the money.
Yeah. And conditions, I like I said, been doing this over 20 years. I've had a loan that's had maybe one or two conditions. I've had a loan that's had 25 conditions. But
that wasn't mine.
That's why you're also hiring me, because when we get the approval, and we look at the conditions that we need in order to get funding for you, I can say it about Robert at American Mortgage Bank. I can't say it at other companies, but what we'll do and what I'll do is I will send you a detailed list of all the items you need to finish funding, and then I'll call you after hours, Monday through Saturday till 9 o'clock at night, and actually walk you through what it is that I need you to round up.
Right.
So you're not like wondering, am I getting the right thing this time, or what's this new thing you're asking me for? So once we have those items and we have the conditions, now we talked about appraisals. Can appraisals have conditions? Absolutely.
Oh, yes.
So when a home comes back to us, it has, we're going to page 2 or 3. We're all excited, like opening up a Christmas gift, because we want to make sure value is correct.
Yeah.
And we get to page 2 or 3 there, and we look at the bottom lower hand corner, and it says, with the magic words, it either says subject to or as is. Tell everybody what subject to is versus as is, if you will, or I can, whatever.
You're doing a roll. I'm gonna let you turn the list for right now.
Okay, so subject to is not what you want to see.
Yes.
Subject to means that here's a value that we've assessed on this property,
Right.
subject to you making these repairs or making these corrections. And sometimes they're easy fixes. Sometimes they're deal killers that require some finesse to figure out how we're going to get it fixed. And we'll come back to that in a second. Now, the other thing that we look for, well, the one we want to see is it says as is. That means the property
Yeah.
in its as is state is of the value that you see at the bottom of the page. And when that matches up to our sales contract, and we've got these conditions that you just turned in,
Right.
winner, chicken dinner. You're going to get funded. You're going to own a home.
Everyone's happy.
Everyone's happy.
Yeah.
It's important to remember, I think that a lot of customers don't really put into perspective how easy the process, like some people think, oh, it's all the documents or anything. The most tedious part of this process of buying a home is probably going to be the day you sign a stack of papers. The rest of it is just generic stuff.
Thanks to us.
Yes.
Yeah.
Because we try to streamline it for you. So application process, W-2s, pay stubs, assets, photo ID. The information is free. We're able to tell you the worst thing that we see and the best thing that we see out there in pricing. And we're able to give you multiple options. And then you can take your time trying to find that home. And, I had a guest on last week, and we talked about the urgency of getting yourself pre-approved right now.
Absolutely a must. Absolutely.
You can't go see the home you want to see and say, okay, I have an offer, and you don't even know if you can buy it yet.
Yeah. That's really, you're doing a disservice to anyone that you're working with if you don't get them pre-approved first. I mean, really, why would you take someone out to get them excited about something just to find out that they can't?
Let's talk about 3 reasons why people don't get pre-approved. Okay, the first reason is they think it's daunting. Well, again, it's not.
Yeah.
Most companies, specifically American Mortgage Bank, you simply go to the American Mortgage Bank. You'll find it here in our link. And you simply click on it. You put in your application. Second step is you put in some income documentation. You send it. You're done. It's that simple. If you don't like computers or doing it that way, I'll meet you in person. You just need to schedule an appointment with me.
He will. Yeah.
With Zoom meeting, whatever you want to do, I'll type it up for you. So the first thing is people think it's daunting. It's not. The second thing is that people can be a little embarrassed about their credit and lack of funds. Okay?
Yeah, don't be.
Don't be, because credit we can work around. We have different programs for people that have had some what we call speed bumps in their credit life, divorces, bankruptcies, things of that nature.
Yeah.
All that stuff, it passes
Yeah.
and it happens. But we can help you with that stuff. And then let's say you're the guy that has the best credit in the entire world and you can shop 50 different banks. I guarantee you no one's going to answer your phone call like we will, like the people that work here at American Mortgage Bank or MyPro. But the third, back to that second thing, cash down. It's usually the biggest nemesis to people because, first of all, money don't grow on trees.
No, I've tried.
The sales prices on these homes, as we know, have increased. And so the cash down portions have also increased.
Yeah.
So it's just kind of followed suit. But there is some relief. First of all, before I share this with you, we do USDA, VA 100% loans. We do down payment assistance programs with 100% financing.
Good programs.
But we've never had $20,000 in grant money available to first-time home buyers. It's a grant, so there are conditions that you have to live up to. But the point being is it doesn't change the terms of your loan.
Right.
You can get a normal loan with this grant money. It covers your cash down, your closing costs, and your escrows. It's forgivable after 5 years if you live in the home. It's an incredible program. So when you talk about cash down, no cash down, that issue is eliminated for a limited time. This money's not going to last forever. So if you're interested, you need to call us 816-777-1515 today or right now. I got the phone right here. But point being is you need to call because this grant money is going to go. We'll get you pre-qualified. It's based on 80% of the median income. You need to have at least $500 of your own assets.
That's it.
You haven't been an owner in the last 3 years on a property. You don't own a property and you haven't bought one in the last 3 years. So those are the criteria and a couple other things you have to qualify just as a normal loan. Okay? So give us a call. Find out. If you're a customer of Kenneth's and you've maybe been on the fence, find out what this grant money can do for you.
Excuse me.
If I know what this grant money can do for you, like I said, it won't last forever. Home ownership, the difference between that and the future, I'll just give you an example.
Mm.
People that have put themselves on the pause mode because they haven't seen interest rates that are a rarity.
Sad.
Sad because of one thing. A same home that was sold last year for 205. They just had their refinance done. It appraised for $232,000
Right.
in a single year.
Seen it.
So what I'm trying to say is you won't spend $28,000 extra in finance charges in a single year. It won't happen. So you can lock in the price of a home today when you buy one. The loan in the future we can massage, you can refinance, you can redo it, you can pay extra on it, etc.
Right.
So there's options out there.
Yeah.
So anyway, don't forget
Mm.
conditions,
Yep.
cash down and closing cost, concessions,
Mm.
and $20,000 in grant money. Okay? So
Make a deal.
heck of a deal. Kenneth, what else should we share with them? You got your Chiefs attire on.
Man, the Chiefs are wonderful, and you know we're going all the way. Super Bowl, baby.
So another reason to buy a home, if you're a Chiefs fan, you know people love this city. Property values are going up. So
There you go.
well, we appreciate you checking in to Meet My Pro. Thanks again, Mr. Kenneth Davis, for stopping by.
Don't forget to tell them where they find me.
Yes, now
Yeah.
listen, you can find him at 816-213-9404. That's directly to him.
Yeah.
He will pick up the phone on weekends and after hours to answer your questions about listings
Sometimes. No, I will.
all the time. Kenneth Davis at kw.com.
Yes.
And we'd love to hear from you. If you have a comment or have some encouraging thoughts about the program, we'd love to know more about it. We'll see you again on Meet My Pro. I'm Robert Bearce here at American Mortgage Bank, and have a wonderful week.
All right. Take care, guys.
Peace.